Are you a landlord looking to raise additional cash quickly and cheaply? Maybe you want to buy at auction. Maybe you want to raise deposits to cover the cost of refurbishments or a conversion. Maybe you've got an eye on the EPC requirements that are coming around in 2025, and you want to get ahead of the game on that. And that's a sensible thing, which we'll talk about separately. So, wouldn't it be great if you could arrange a line of credit where you only pay for what you use, and you can repay and draw down money without any penalty? With rates from about 5% and this level of flexibility, you may never need bridging finance again. And the money is available instantly when the opportunity comes your way. So if you need to go to an auction, you can. Great. Wouldn't it be great if the process was fast and easy so you can get indicative terms and initial acceptance really, really quickly? And who wants an old-fashioned application process when lenders now have automated valuations, open banking, and they can complete loans in as little as 5 days? So if an interest-only facility which works just like a credit card, with loan amounts from £25,000 to £1 million sounds interesting, you need to watch the rest of this video. My name's Steve Walker from Promise Money, and we specialise, amongst other things, in providing products such as this to landlords and property investors. Products similar to this have been round for a couple of years, to be fair. However, we think this one is faster, easier and cheaper. Unlike others, it's designed with a really low touch, fast process, so you can get indicative terms really quickly, and you can get the loan completed quickly too. It's available to both limited company landlords and landlords who own buy-to-let properties personally. Others are not. So think for a moment how you might use, for example, a £300,000 loan facility with rates from under 5%, which works just like a credit card, allowing you to draw down cash and repay it as often as you like without penalty, and only pay interest on the cash you're using. Think about that now. I can see lots of applications for that. So let me tell you briefly how it works. Well, the loan is secured by way of a second charge across one or a number of buy-to-let properties. This means you don't need to change your current mortgage arrangements, lose your existing fixed rates, or remortgage multiple properties with multiple lender fees to raise additional cash. On a single buy-to-let property, you could borrow up to 80% loan to value, which is effectively a top-up facility sitting after your existing first mortgage. Alternatively, you could take a facility secured over up to 10 properties, up to 75% loan to value. And using automated valuations, this can save a fortune in setup costs, and we can check out the numbers really quickly so you know what's available without paying a penny for a valuation. Now, many landlords don't have sufficient equity within their buy-to-let portfolio and often ask, well, can we get this sort of facility secured against our main residence? And the short answer to that is yes. We have another product, which is essentially a line of credit or overdraft, which gives the same options to flex the balance up and down without penalty for the first 5 years before it converts into a term loan. It's available up to 85% loan to value as a second charge registered behind the existing mortgage, just like the buy-to-let product. And as it's secured against a borrower's main residence, affordability is assessed on their personal taxable income rather than the buy-to-let income. But with maximum lending up to 6 times the gross household income, you can often get more out of one of these than you can out of a remortgage. Now, another common question we get asked is there a product for landlords and property investors where that they can access without having to prove all of their rental income? And this is particularly useful for developers as well, because your income can be a bit up and down. You know, 1 year can be great, the next year is not so great. It doesn't work like somebody who's got a steady job. And the answer to that is yes. We have a lender which will consider second charge loans for business purposes secured on borrower's main residence or on buy-to-lets, even on commercial property, to be fair. The loan to value is more likely to be around about 65% loan to value, but it still allows the flexibility to draw down and repay the loan as required. As you might expect, because we haven't got proven income in this scenario, the rates aren't as competitive, but it compares really well against bridging loans and provides far more flexibility for up to 2 years with an option to renew. So you can flex it up and down, which you can't with a bridging loan. If one of these flexible lines of credit loans is of interest to you, please do get in touch with the team at Promise Money. We think having something like this in your armoury as a landlord or a property investor can help you save money and move faster when it comes to doing deals. Please don't forget to subscribe to our YouTube channel. Also, check out our website, go there and you'll find lots of information on other products. But the YouTube channel is great because there's loads of products and videos on there specifically aimed for landlords and property investors. So please like our channel, share our videos, and share them with people who you think they might benefit them, or get in touch via the website promisemoney.co.uk. Thanks a lot. See you soon.